Hello everyone, welcome to the 108th episode of me learning how to trade in Forex. So in the last episode, we went through scalping. So which type of trader are you? Went through the scalping traders, and then we started doing the day traders. So I went through this, and then I think we ended up onto the types of day trading. So let's get started then. Types of day trading. So day traders are looking to maximize intraday profits, often use one or multiple of the following day trading strategies. Trend trading. Trend trading is when you look at a longer time frame chart and determine an overall trend. Once the overall trend is established, you move to a smaller time frame chart and look for trading opportunities in the direction of that trend. Types of day trading. Day traders looking to maximize that trend trading. So this is when the trader looks at a longer time frame chart and determine an overall trend. So once the overall trend is established, you move to a smaller time frame chart. So look at a smaller time frame chart and look for trading opportunities in the direction of the overall trend. Using indicators on the shorter time frame chart will give you an idea of when to time your entries. So using indicators on the shorter time frame chart will give you an idea of when to time your entries. For an example of this style of trading, see Pipsology's world-renowned Cowabunga system. First, determine what the overall trend is by looking at the longer time frame. You can use the indicators. To help you confirm the trend. So, indicators can be used to help confirm the trend. Indicators can be used to help confirm the trend. So we've got the chart here. So this is a 4-hour chart. Yeah, so 12, 11, 3rd, 20, 12, 20, 13, 20, 16, 17, 18, 19, right? 4-hour chart shows an overall downtrend, so it goes whoop, like that. Overall downtrend. Once you determine the overall trend, you can then move to a smaller time frame and look for entries in the same direction. Remember, this is called multiple time frame analysis. Yep. Take only short trades on the 15-minute chart. So this is 1 hour, 15-minute chart. This is not the 15-minute chart. Or is it? Entry. Well, apparently it is a 15-minute chart. Or 15 min, yep. Entry, and then take an downtrend entry. Or go short. Counter trend trading. Trend trading. Counter trend trading. Counter trend day trading, similar to trend trading, except that once you determine your overall trend, you look for trades in the opposite direction. Similar to trend trading, but once the overall trend is determined, look for trades in the opposite direction. The idea here is to find the end of a trend and get in early when the trend reverses. This is a little riskier but can have huge payoffs. So the goal is to find the end of a trend and get in early when the trend reverses. So we've got the 4-hour chart here again. Nice long downtrend. Boom, boom, boom. Stochastics indicate the market is oversold, so it could be due for a reverse. In this example, we see that there was a long and exhausted downtrend on the 4-hour chart. This gives us an indication that the market may be ready for reversal. So that was where the stochastics was pointing at, I'm assuming. Oh no, this is a 15-minute one. Since the overall trend looks exhausted, you can take a trend in the opposite direction on a smaller time frame. So then start buying here, go long, whoop, it goes up. Since our overall thinking is a counter trend, we look for a trade in the opposite direction of the overall trend on a smaller time frame, such as a 15-minute chart. Nice long downtrend. Your goal is to catch the new trend early, so from here. Stochastics indicates that the market is oversold. And then it goes up. Traders who use this strategy need to be quick to spot the end of a trend. So if using this strategy, you need to be quick to spot the end of a trend in order to open a position at the optimal entry point. This strategy is fighting the trend and can work against traders at times. Remember that going opposite the trend is very risky, but if timed correctly, it can have huge rewards. Counter trend trading favors those who know recent price action really well and so know when to bet against it. So counter trend trading is for those who know recent price action really well and knows when to bet against it. Sounds a little bit risky. Range trading. Range trading, sometimes referred to as channel trading, is a day trading strategy that starts with an understanding of the recent price action. A trader will inspect chart patterns to identify typical highs and lows during the day while keeping a close eye on the difference between those points. So starts with an understanding of the recent price action. The trader will inspect chart patterns to identify typical highs and lows during the day while keeping a close eye on the difference between these 2 points, or these points. So I am rubber, you are glue, whatever you say bounces off me and sticks to you. So this is the resistance line, we've got the support line here. For example, if the price has been, so we can just see the price has been just bouncing between the two support and resistance lines. For example, if the price has been rising off a support level or falling off a resistance level, then the trader might choose to buy or sell based on the perception of the market's direction. This is known as trading in a range, where each time price hits a high, it falls back to the low and then vice versa. A day trader who's using this strategy and is looking to go long will buy around the low price, so you buy around here, and buy around the low price and sell at the high price, so then you would sell around here. Trade use strategies looking to go short will sell around the high price, so you sell around here and then you buy around here or something. Yeah, so traders who use this strategy to go long will buy low and sell high. Traders who use the strategy to sell, to go short, will sell high and buy low. Most range traders will use stop losses and limit orders to keep their trading in line with what they perceive to be happening in the market. A stop loss order is a stop loss limit orders. So most traders use stop loss and limit orders. Stop loss orders. Stop loss order is a point at which a position is automatically closed out if the price of the security, which in this case is the currency pair, drops below the trader's entry point. A limit order is the automatic closing of a position at the point where the trader perceives a profitable run could end. Range trading requires enough volatility to keep the price moving for the duration of the day, but not so much volatility that the price breaks out of range and starts a new trend. Range trading requires enough volatility for the price to basically bounce between the two levels. For the price to keep moving during the day. However, not so much that it breaks out of the range and starts a new trend. But if the price does break out, there's a strategy for that as well, which is breakout trading. Breakout trading. Breakout trading is when you look at the range a pair has made during certain hours of the day and then place trades on either side, hoping to catch the breakout in either direction. When traders look at the range a pair has made during the day and then place trades on either side, hoping to catch a breakout in either direction. This is particularly effective when a pair has been in a tight range because it is usually an indication that the pair is about to make a big move. This is particularly effective if a pair has been in a tight range because it's usually an indication that the pair is about to make a big move. Your goal here is to set yourself up so that when the move takes place, you are ready to catch the wave. So USD versus JPY, 15-minute chart. So we've got the breakout point. So I'm assuming this is the resistance, support. Stop for long trade should be 20 pips below the upper breakout point. Stop for short trade should be 20 pips above the upper breakout point. Targets should be same as the range of the breakout price, so this is 44 pips as well. 44 pips. Place our entry points just a bit above the resistance and a bit below the support. So we can see the price has been bouncing between these two lines. In breakout strategy trading, you determine a range where support and resistance have been holding strongly. Photographic image. Big move. Oh, it's been so long since I pasted an image. What's the image dimension that I've set? 49.99. So like that. You determine a range. Actually, let's just you determine a range where support and resistance have been holding strongly. Then set entry and exit. Oh no, then set entry points above the resistance line and below the support line. You want to target the same amount of pips that make your determined range. A general rule is to have a limit order the same amount of pips that makes up the same amount of pips as the range. Make sure you check out our trading breakout session so you get this down pat. Yep. Okay. That's what I remember. This chart looks familiar somehow because I think we've seen this chart before. Okay, so news trading. News trading is one of the most traditional, predominantly short-term focused trading strategies used by day traders. Someone who's news trading pays less attention to charts and technical analysis. So, the trader pays less attention to charts and technical analysis. They wait for information to be released that they believe will drive prices in one direction or the other. This information could be a report releasing economic data such as unemployment, interest rates or inflation, or simply breaking news or random presidential tweets. They wait for news releases that they believe will drive prices in one direction or the other. These information could be a report releasing economic data such as unemployment, interest rates, inflation, simply breaking news or random presidential tweets. To do well with news trading, day traders tend to have a solid understanding of the markets in which they're trading. Traders need to have a solid understanding of the markets they're trading. They develop the insights to determine how the news will be received by the market in question in terms of the extent to which this price will be affected. So they develop the insights to determine how the news will be received by the markets in question in terms of the extent to which its prices will be affected. They will be alerted to various different news sources at the same time and know when to enter the markets. The drawback of news trading is that events can cause substantial movements in price. The drawback of news trading is that events that cause substantial movements in prices are usually rare. More often than not, the expectations of such events are factored into the price of the run-up to the announcement. So aka, when the news is released, it's probably already too late to do whatever you wanted to do. Insights to determine how the news will be received by the market in terms of the extent to which its price will be affected. However, more often than not, the expectations of such events are factored into the price in the run-up to the announcement. If you're interested in news trading, we've devoted an entire section to it in our School of Pipsology called Trading the News. Day trader, what my friends think I do, what my parents think I do, what society thinks I do, what my wife thinks I do, what I think I do, what I really do. Okay. Swing trading. So, swing trading. Swing trading refers to the medium-term trading style, a medium-term trading style that is used by Forex traders who try to profit from price swings. Used by traders who try to profit from price swings. It is a trading style requires patience to hold your trades for several days at a time. This trading style requires patience to hold trades for several days at a time. Swing trading stands between two other popular trading styles, day trading and position trading. Swing traders identify a possible trend and then hold the trade for a period of time, from a minimum of 2 days to several weeks. Swing trading identifies a possible trend and holds the position for a minimum of 2 days to several weeks. It is ideal for those who can't monitor their charts throughout the day but can dedicate a couple hours analysing the market every night. You're not missing much. Day trading isn't all it's cracked up to be. Ideal for those who can't monitor their charts throughout the day but can dedicate a couple of hours analysing the market every night. Swing trading is best suited for those who have a full-time jobs or school but have enough free time to stay up to date with what is going on in the local global economy. Swing trading strategies employ fundamental technical analysis in order to determine whether or not a particular currency pair might go up or down in price in the near future. Swing trading attempts to identify swings within a medium-term trend and enter only when there seems to be a high probability of winning. For example, in an uptrend you aim to go long at swing lows and conversely go short at swing highs. Take advantage of the temporary counter trends. Swing highs, so aka the bit where there's a trend reversal then. Oh no, not trend reversal, but like the highs and lows of each bit, I guess. Don't really know what you call it. So got the highs here, that's a high, that's a new high, that's a new high. Low, a new low, oh no, low, slightly higher low, and a slightly higher low. So in an uptrend, you buy here, you sell here, you buy here, you sell here, you buy here, you sell here. Because trends last much longer than a day, larger stop losses are required to weather volatility. As trades last longer than a day, larger stop losses are needed to weather volatility. And the Forex trader must adapt that to their money management plan. You will most likely see trades go against you during the holding time, since there can be many fluctuations in the price during the shorter time frames. It is important that you're able to remain calm during these times and trust in your analysis. Since trades usually have larger targets, spreads won't have as much of an impact on your overall profits. As a result, trading pairs with larger spreads and lower liquidity are acceptable. During swing trading, traders will most likely see trades go against them during the holding time. However, remain calm and trust in the analysis. As a result, trading pairs with larger spreads and lower liquidity are acceptable. So spreads won't have much impact on your overall profits. As a result, trading pairs with larger spreads and lower liquidity are acceptable. Okay. Types of swing trading. How do you swing trade? Of swing trading. How do you swing trade? There are several different trading strategies often used by swing traders. Here are 4 most popular: reversal, retracements or pullback, breakouts and breakdowns. Reversal trading. Reversal trading relies for a change in price momentum. Relies on a change in price momentum. A reversal is a change in the trend direction of an asset's price. For example, when an upward trend loses momentum and the price starts to move downwards, a reversal can be positive or negative, or bullish or bearish. A reversal being a change in the trend direction, i.e. from uptrend to downtrend. Retracement trading. Retracement or pullback trading involves looking for a price to temporarily reverse within a larger trend. So involves looking for a price to temporarily reverse within a larger trend. Price temporarily retraces to an earlier price point and then continues to move in the same direction later. Reversals are sometimes hard to predict and tell apart from short-term pullbacks. While a reversal denotes a change in trend, a pullback is a shorter-term mini-reversal within an existing trend. Think of a retracement or pullback as a minor counter-trend within the major trend. If it's a retracement, price moving in against the primary trend should be temporary and relatively brief. The retracement should be temporary and brief. Reversals always start as potential pullbacks. The challenge is to know whether it's only a pullback or an actual trend reversal. Reversals always start as potential pullbacks or retracements. Therefore, it's key to know whether it is only a retracement or an actual trend reversal. Breakout trading. Breakout trading is an approach where you take a position on the early side of an uptrend and looking for a price to break out. You enter position as soon as the price breaks a key level of resistance. take position on the early side of an uptrend and look for the price to break out, then entering into a position as soon as the price breaks a key resistance level. Break down the opposite of breakout. So take a position at on the earlier side of a downtrend and look to enter into a position as soon as the price breaks a key support level. You might want to be a swing trader if you don't mind holding your trades for several days. You're willing to take fewer trades but more careful to make sure your trades are very good setup. You're willing to take fewer trades but more careful to make sure your trades have very good setups. I think I just did this in separate lines last time. You don't mind having large stop losses. You don't mind having large stop losses. You are patient. You're able to remain calm when trades move against you. When trade moves against you. You might not want to be a swing trader if you like fast-paced, action-packed trading. You like fast-paced, action-packed trading. You are impatient and like to know whether you are right or wrong immediately. You are impatient and like to know if you're right or wrong immediately. You get sweaty and anxious when trades go against you. You get sweaty and anxious when trades go against you. You can't spend a couple hours every day analyzing the markets. You can't spend a couple of hours every day analyzing the markets. You can't give up your World of Warcraft raiding sessions. If you have a full-time job but enjoy trading on the side, then swing trading might be more your style. So if you got time on the side, if you don't have a lot of free time or have a full-time job. It is important to remember that every trading style has its pros and cons, and it is up to you, the trader, which one you will choose. I am going to leave this episode here. So in the next video, we're gonna carry on with what type of trader are you with position trading. So thank you all for watching. Peace.